Day, everyone. I'm probably the only person who is saying that with a smile on my face in the room right now. But the idea of this is that by the end of it, hopefully you'll be, if not happy, at least a bit more comfortable, a bit more relaxed about what has come in, today. So first of all, thank you all for being here. Nice to see some familiar faces, a lot of Virtue Zone clients here as well, which is great. I think there's some of our competitors here as well, which is very flattered to see you here. This morning, straight off the cuff, we're still waiting for the big announcement around free zones, around the treatment of qualifying income. Apparently that's going to be coming out today. I've got Caroline from my team hitting refresh like she's waiting for exam results. And so if we get that legislation out during the session, we could do a live reading, which would be probably the least exciting live reading you'll ever go to, but still very important nonetheless. Okay, so the purpose of today, it's very much along the lines of a workshop. I know there are a lot of sort of webinars and seminars out there discussing the legislation itself. I think what we wanted to do today is very much target this at small, medium, micro and startups. Very much of a workshop sort of process. So what do you actually need to do as opposed to what is the legislation saying? I think people are relatively familiar with what the legislation is saying, not so much on how it impacts the small and micro businesses. So the first question that we are getting pretty much non-stop is around the timing. So I left the clicker over here. Whoops. First question we're getting is always around timing. And a lot of clients who are, for no good reason, feel a little bit embarrassed about asking this, which is, what is my actual financial year? And it's with good reason, because there's up until now, there has been no mandatory reason to be keeping financial accounts for a lot of businesses. I know some free zones have a mandatory audit requirement, not always enforced. If a company is filing VAT returns, then sure, they might be doing their accounting. But still, 90% of clients that I've spoken to don't actually know what their financial year is. So this is actually a very easy one to solve. So for those of you that are registered in a free zone, and actually those of you that are registered in the mainland as well, your financial year is just aligned to calendar year, unless you've ever changed it. So pretty much every single free zone abides by this. They say your first financial year runs till the end of the current calendar year, and then from then on, you just go January to December. There is at least one exception to this. Do we have anyone registered in DWTC by any chance? Okay. Do you want to just pop over and see me afterwards? Because DWTC does a little bit of a different process where it sort of aligns to when you actually set up. So we'll just check that, and we'll be able to tell you when tax actually affects you. So financial year question solved. The next question is, okay, well, what does that mean for when I'm taxable? So you're probably aware that obviously tax starts today, but only applies for your first taxable year, which starts after today or on today. So it puts you into two groups, really. So apart from the DWC people, but if you already have a business which is open, the likelihood is that your financial year starts January each year. Therefore, tax only impacts you. You're only taxable from the 1st of January 2024. So there are steps that you should probably be taking now, but in terms of when your tax actually, your taxable year actually starts, that's 1st of January 2024. The second group are those of you that don't have a company yet. I know there are people here that are looking at opening a company soon, and they're looking for information around that. If you start your company from today, your company will be getting created into a tax environment. So you're taxable pretty much from the outset. Doesn't make a huge amount of difference. It's all timing, and the likelihood is that you probably won't be taxable anymore. Sorry, you won't have tax to pay anyway. It just means that the deadlines are a little bit different for you. Okay. Oops. Sorry, hang on. Okay, we're going to talk through the sort of three layers. I like to call them the three layers of insulation against having to pay corporate tax. Before we get to that, the thing that you're going to hear me say over and over, and I apologise in advance, is what are the compliance steps, right? And so every single business is going to have to register for corporate tax. You're going to have to do accounting. Recently they've released the accounting standards that apply, and everyone's going to have to file a tax return. That applies even if you're exempt from paying tax, even if you're registered in a free zone. If you have no activity in the business, it applies to everyone. It's still the most common question out there. I have people coming to me and telling me that they're in a free zone and therefore they don't have to do anything at all. Unfortunately, that's not the truth. The legislation clearly says that free zone companies, for example, they do need to register. They will need to do accounting, and they'll have to file a tax return. First of many times, I will say those three steps. Okay. Now, I said I wouldn't talk too much about legislation, but I want to just quickly go through the exemptions that are really available for the small and medium enterprises and micro and small businesses. And to start with this, you really need to look at why the tax is being introduced in the UAE. This isn't a punitive revenue gathering exercise. They want to cause as little disruption as possible to this sector of the economy. And so as a result, they have very, I wouldn't say lenient, but very wide exemptions and relief rules available. So there are actually a couple of layers that you need to go through before you're actually even looking at your taxable profit. The big one that we're still waiting for is obviously the free zone exemption. Caroline, we got anything yet? No? Okay. Any moment now, I'm sure it'll come. So we'll just talk through these and what the laws actually say about each so far. Okay, the qualifying free zone company. So the piece that is still pending is around the source of revenue, right? So I'll just talk about the piece that is pending first, and we'll go through and we'll make an assumption so that we can actually walk through some scenarios. So the piece that is still waiting is around how we treat the source of revenue. So there's sort of two ways that this can go. So if you are in a free zone and 100% of your revenue is coming from outside the UAE, then we're pretty sure that will qualify you for the free zone exemption. What we're not sure of yet, and what is still being decided, is where you have, let's say, 10% of your revenue coming from inside the UAE, or just one client inside the UAE. And what we're waiting to find out is whether that fully disqualifies you from the free zone exemption, or if you just pay tax on the portion of revenue that's coming through from the UAE. Right, so the administrative steps won't change between those two. So they've already said that to get the free zone exemption, you'll need to do an audit. That's in addition to the 3 steps that we've already said. So you'll need to register, you'll need to do your accounting, you need to get an audit, and the audit will basically be confirming that you qualify for the free zone exemption, and then you'll submit that in your tax return. And assuming all is correct, then the FTA will say, great, no tax to pay. So one of the big benefits, and this is in contrast to the small business relief, which we'll talk about, is that the free zone exemption goes beyond 2026. Right? So the free zone exemption we know will go, well, as long as the free zones exist. I think they say 50 years tax-free. And so the FTA or the government is honouring that commitment and making sure that the free zones do remain tax-free as long as people abide by these rules. There is also the caveat that a free zone company needs to satisfy the economic substance requirements as well. There we go. Okay, small business relief. So let's say you, yeah.
What are the economic substance requirements?
Okay, we'll quickly go. Yeah, that's right. We'll quickly go through that. So economic substance basically is it's a tax-related test that the ministry has in place here. It is a measure of stopping people from shifting profits from high tax jurisdictions to low tax jurisdictions. Yeah, and so basically it's a test to make sure that you're actually running a business here in the UAE, and you don't just, you haven't just put an intangible asset in the UAE and you're using that to manufacture lower profit in another country and, having the profit here. I'm more than happy to talk about it in more detail, maybe afterwards, because it can go pretty complex. Yeah. Okay. Small business relief. So let's say that you don't qualify for the free zone exemption, or you're a mainland company. This is a revenue-based relief that the ministry have announced. I think it's fantastic. It's very friendly to medium. We say small with inverted commas because the threshold is 3 million dirhams of turnover. So if you have less than 3 million dirhams of turnover, revenue, not profit, it's your revenue, then you won't have to pay any tax, it's the highest tax-free threshold that I've heard of. I know back in New Zealand it's pretty much non-existent. I think it's $12,000. So the fact that they've come out with this to start is fantastic.
Is that for each year?
Each year. And you can't actually if you go over in your first taxable year, you can't get it, you can't jump back into it afterwards. Yeah. So you need to maintain the 3 million exemption.
When you say audit, you mean audit for 1 year, 2 years, 3 years?
For your taxable year. For this.
Just for the last.
Yeah. So for that taxable year, you'll need to get an audit for the free zone exemption.
1 year only.
Yeah. Well, for each taxable year, you'll need to do it. Yeah, for each financial year. Okay. So the small business relief. So revenue based, 3 million of revenue. You're either in or you're out. If you've got 3.1 million of revenue, then you're taxable and you don't qualify. It's going to be a huge benefit for a lot of businesses that are making, let's say, 2 million of revenue, and they're consulting businesses and their profit is 1.5 million, for example, because in the absence of this rule, they would be taxable on everything over 375,000 profit. So the only shortcomings of this rule is that it's only available until 2026, and that becomes relevant if you're looking at either the free zone exemption or the small business relief. And the other thing is you can't actually carry forward your losses, which does become significant if you are, for example, in your first year and you've incurred a large loss and you want to carry that forward to claim in future profitable years.
Would it be possible to apply the small business relief and the qualifying free zone together?
No.
Or no, it would be either one?
Yeah. So they've made it very clear on the small business relief that you can't be a qualifying free zone person, and which it's a bit of a catch-all piece of the legislation because there's always going to be a preference for the small business relief.
Sorry, John.
Yeah.
In relation to the expiration of the small business relief at the end of 2026.
Yeah.
Is there any consideration to being allowed to apply for the qualifying free zone after that date?
So all we have so far from this is the consultation document, which the ministry released, and they said that it's a irrevocable decision if you opt out of the free zone exemption. So you can't go, I'm not going to bother with an audit for the next couple of years, I'm just going to do the small business relief, and then after 2026 go, I'm just going to jump back into the free zone one. Now, again, the consultation document isn't something that's final. I'm sure they're going to cover this in the final piece of legislation, which I haven't been waived at, so it still isn't out. Yeah.
So this is applicable for free zones, not LLCs?
We'll talk about, no, it's LLCs. So mainland companies, absolutely, they're the ones that this is aimed at. Free zone companies might be able to take advantage of it, and we'll go into that in a second as to why how they would do that or why they might do that. Okay, and the third category is if you don't qualify for the free zone exemption and you don't qualify for the small business relief, then you are a taxable business, right? So, by the way, we'll send the slides around afterwards. I see a few phones popping up. We'll certainly send them around. So if you don't qualify for the free zone exemption, you don't qualify for the small business relief, only then are you looking at being a taxable business. And that's when we sort of talk about the way we talk about tax in the rest of the world around how do you legally minimize your taxable profit. Now, the fact that we've gone through 2 exemptions before even getting to this point, I think really reflects just how friendly these tax laws are to small and medium companies. To be a taxable business, you have to not qualify for the free zone exemption, and your revenue has to be over 3 million, right? So, for any startup or any small business, this is almost it's not, they're not going to be doing anything along the lines of this at least until 2027.
Excuse me. So you said losses can be carried forward.
Yeah.
So is this only applicable from the time the tax law came into effect, or prior periods as well?
Tax law. Yeah. Okay, we're going to go through a few scenarios, putting these into practice. And actually, before we do that, I might just talk about sort of the preference of those 3 pieces that we just went through. I might just jump back before we do it. Sorry, we'll go back here. Okay, I think there is a strong preference in terms of which exemption a company goes for, right? So we've talked about the benefits of the free zone exemption. It's ongoing. If you think of those as layers of insulation against paying corporate tax, and again, I think in any other country I'd feel a bit awkward saying layers against paying corporate tax, but I think the spirit of the tax law here is very much that they don't want to disrupt the sector, so it's fine to say that. So by far, I think the most preferential exemption, if you qualify for it, is the free zone exemption. Obviously, the big draw card is it goes beyond 2026. So there is no benefit in opting out of the free zone exemption because beyond 2026, you're going to be paying tax. There is no threshold on it, right? So if you are a free zone exempt company and you qualify for that exemption, it doesn't matter if you're making more than 3 million revenue because you're not going to be paying tax. The reason we talk about the preference is because to get this exemption, you have to do that extra step of an audit. And what I'm trying to explain is that in a lot of cases, it's going to be worthwhile doing that audit just to maintain that free zone exemption as you go. Because if you opt out, you can't opt back in. Did you have a question?
Does it make any difference in which Emirates your company
no, so it's a federal level tax. So all the Emirates are treated the same, and they've also said that all free zones will be treated the same as well.
John, this audit would be an annual process and performed by whom?
Annual process performed by a licensed auditing firm. So, depending on what firm you go with, it can be around between 5,000 and 10,000 dirham for a simple one. Obviously, if you go with some of the larger competitors, then it can be a lot more expensive than that. But for a small business, it definitely can be looked at as a worthwhile investment against having to pay tax. Okay, so the next layer is if you don't qualify for the free zone exemption, then you may look at opting out of the free zone exemption and going for the small business relief, right? So in those cases, you'd really have to look at what you think the future of the business is going to be. If you think your revenue is going to be at less than 3 million and possibly declining, you might not think it's worthwhile going through the audit and going through those extra admin steps to maintain your free zone exemption. It's a case of simplicity for you, and so you might elect to go for the small business relief instead. And then obviously, if neither of those are available, then you're a taxable person, and that's when you get into the much more complex tax planning.
I'm talking about this 375K. This for there's no tax for this one, right?
First,
net profit we are talking.
yeah, sorry, and I probably should have explained that a bit more. So, if you are a taxable person, the first 375,000 dirhams of profit is tax-free, and then the first dirham after that, you're paying tax. So everything above 375 is taxable.
If the company's profit is 500,000,
yep.
I need to raise the 375. So I need to pay 125,000 9% tax, correct?
9% on the 125, correct. Okay. But again, before you get to that point, you're looking at, do you qualify for the free zone exemption? Do you qualify for small business relief? And it's only if you don't qualify for either of those, only then are you looking at paying tax. Sorry, there's two questions down the back. Sorry, back first.
So what if the turnover is actually smaller than 3 million, but the profit is larger than 100?
That's fine. So you've got the small business relief. So think of it as layers. So no free zone, then you look at the small business relief, and then you're looking at the taxable profit. So yeah, so I know it sounds a little bit counterintuitive because you could be a business that has 3.5 million turnover, and you make 1 million dirhams of profit, and you're paying tax on 625, or you could be a business that is turning over 2.9 million and you're making a lot more profit, 2.5 million, and you're not paying any tax at all. And I think that's probably one of the reasons that they're limiting until 2026, and it's really softening the blow, I think, a little bit on those companies. Yep. Sorry, if there was. Yep.
You touched on it. What happens in a situation where all your free zone companies, but all your business is on the mainland, and it's with a semi-government institution that doesn't seem to mind? Where does that leave?
That's the question, yes.
Very democratically put. So if your business is on the mainland, this is the key piece that we're still waiting on the legislation. Either it's going to be you lose your free zone exemption, or you're going to be paying tax on that portion. Yeah. I'm a little bit disappointed that I wasn't able to. I was really looking forward. I mean, this is kind of nerdy, but I was really looking forward to being able to answer those questions correctly today. But I'm just waiting. Yeah.
Very quickly, if you actually opt to pay taxes as a free zone entity, and because your clients are actually on the mainland, and later on down the line your clients shift to non-mainland clients, can you then opt back out?
Nothing in the legislation so far has said that you can do that. Yeah.
So once you're called, you're called.
Yeah. Again, this is going off the consultation document. It's an irrevocable decision until we get that final piece of legislation. But I doubt they're going to change that. Otherwise, people are going to really milk it and jump back and forth.
Okay, so what would be the perspective with standalone entities? So they're not linked, they're not under a structure. It's just the key shareholders, say, be on mainland, and then within free zone. Will that be?
Sorry.
Will that cause issues? So free zone opts for the relief for paying the taxes, and the mainland entity continues with that.
So I think the question you're getting at is around, can you set up structures to avoid having to pay, so you have mainland in one, going through one, free zone going in the other. So when they release this legislation, they're also going to have an anti-abuse law, right? So each piece comes out, and I'm pretty sure they're going to say, if you didn't already have the structure in place, or you don't have a valid commercial reason other than avoiding, if the sole reason is avoiding tax, you're not.
It's just the fact to get the relief because you've been here for long. The costs don't come. So say you're in operating losses, you carry forward that on mainland. Now most of the clients are on free zones. So
if the clients are in free zones and it's all happening inside the UAE, then I don't think you'll get the exemption.
It's not going to be exempted then. If the.
No, under that scenario, it wouldn't be. Okay, sorry.
Just to be clear, if it's a mainland company, you don't require an audit if you're going to be below 375.
That's right. Yeah. So there's only two categories that they've said require audits. That's very, very large companies and qualifying free zone companies. So what they mean is if you want the qualifying free zone exemption, you have to get an audit. But a mainland company with less than 3 million dirham revenue, you don't have to get an audit to do that. They've really made it as simple as possible. In fact, in terms of the accounting standards that you have to apply, a company that has got less than 3 million revenue can actually do their accounting on a cash basis. It still means you have to produce proper accounts. You can't just hand in your bank statement. But it just means you don't have to account for things like accrued revenue or accrued expenses or anything like that. So it makes it a bit easier.
So these options of tax relief, are they applicable at the time of registration or at the time of filing?
No, time of filing. So it's a bit different to VAT registrations. Yeah. So you may be already registered for VAT, and this is another question we get a bit. If you're already registered for VAT, it doesn't matter. You still need to register for corporate tax. But the corporate tax is same for the corporate tax registration is the same for everyone.
Okay.
So you don't declare your exemption or anything like that, and it's a bit different to VAT because at the start of the year you probably don't know with 100% certainty how your year is going to pan out.
Exactly.
Yeah.
So at the time of filing, that's when you choose the exemption.
Yeah. So what the filing will look like, it'll be you submit your financials, you fill out the financial data.
Correct.
Or if you are going for the small business relief, they might have a checkbox where you say, I'm going for this relief, and you fill in your revenue number. You might have to say what accounting standard you used.
Okay.
Yeah.
So you're only tied to your exception method once you do the first return, technically.
Yeah, that's right.
But the registration is still mandatory.
Mandatory, yeah. And even if you've already done a VAT registration, you still need to do a corporate tax registration.
When is the deadline for registration?
So the registration deadline is actually quite long. So you don't even have to do it until after your first tax year. But really, we really recommend doing it sooner rather than later. Don't wait. They haven't actually said the penalties yet. But for example, late registration for VAT, it's the 10,000 dirhams plus the penalties on top of that. So there's no benefit in holding off doing your registration. So they haven't actually opened it for free zones yet. I'm sure they'll do. Oh, sorry?
We were in free zone, we did it yesterday.
Yeah, so we registered a couple of free zone clients and they told us off. They said, please wait till we say that it's open for free zones. So you can do it, but we're not telling people to do it.
You can register, but it will be rejected later on.
Oh, right. Okay. Yeah, they just sent us a short email.
So I have a twist on the first lady's question. Let's assume that you have a free zone business with mixed revenues. Let's say that 60% comes from overseas, 40% it's somehow tied to UAE companies.
Yeah.
If you set up a second company and you separated the streams so that you only had international income from the new co, and you kept the other part in the old co, and then you made the old co taxable and the new co non-taxable. Would that be legit?
Short answer, when you say the word legit, probably no. If the sole purpose is to avoid having to pay tax, then it'll fall afoul of the anti-abuse laws. But if you already have the structure in place, for example, or you have a valid commercial reason for having the two separate entities, then that would be fine. What we do know is that intercompany transactions won't be classified as onshore revenue. So if you did have those two companies so you had an onshore and a free zone, and those two companies were doing transactions with each other.
I'm talking about 100% offshore from the start. So basically, a company that started offshore had the majority of its business dealing with international companies, but then did one or two deals with local companies.
Yeah.
Can you let that sort of die in the tax swamp and then set up one which is 100% pure? in a free zone environment?
Sorry. So if you lose it once, can you restart it?
Yeah.
Restart another one? Yeah. I mean, I'm sure if you close down the other one, then that would probably be fine.
Yeah.
If it's a whole new operation, then there shouldn't be an issue there. Yeah. Yeah, that's a good question. Yeah, because I know that you can't just go and split it, right? For the purposes of but if you start a new one afresh, then it's a very good question.
Sorry, how do you mean an answer? So if you have an exemption for let's say 3 years and all your income is coming from abroad, and in the 4th year you have a project on the ground here in the UAE, then you lose the exemption permanently.
Yes, that's what the law said so far. So that's what the consultation document has said so far. That basically, if you lose it, then you don't get it back. So the primary reason for this is to avoid free zone companies get an unfair advantage against mainland companies, because if they can effectively subsidise their tax costs with offshore revenue, then they have an unfair advantage against companies that are here.
Between the revenues you gain onshore. If you have a government contract, semi-government contract, or non-profit organization.
No, they haven't gone that far yet. Yeah. Okay. Just mindful it's 5:02. We'll just quickly run through a few scenarios. I might just skip the first two, because what I really want to talk about is where the different exemptions might intersect, and you might be looking at the question of, all right, well, which one do I go for? So this first scenario, these are just baseline scenarios. So if you're a free zone company, you've got 5 million dirhams of revenue, you qualify for the exemption, there's no point in opting out because you'd just be taxable, right? Sorry, I'm just going to skim through these two very fast. Very straightforward small business relief. So you've got 2 million of revenue, you don't qualify for the free zone exemption, you've got profit of 1 million, you'll very clearly be going for the small business relief while it's available. Otherwise, you'd be paying tax on 625,000 dirhams of that profit. Okay. You wait. Okay, so this is a scenario where a mainland company might elect not to go for the small business relief, and it's around the ability to carry forward losses. So if you, for example, setting up in your first year, your revenue is let's say 500,000 dirhams, you make a big loss on that, you're not going to elect to go for the small business relief because you wouldn't be able to carry forward your losses. Right, so if the following year your revenue ramps up to 3.5 million and you're making 1 million dirhams of profit, you'll be able to claim the loss that you made in the prior year, which you wouldn't have been able to do if you went for small business relief. So that's probably one of the only reasons that you would elect to go for that you wouldn't elect for the small business relief if you're a mainland company or if you didn't qualify for the free zone relief. Sorry, free zone exemption. Okay, this is the one where you might be looking at a decision as to which one to go for. So let's say you're a free zone company, you've got 500,000 dirhams of revenue, you qualify for the free zone exemption, but your your revenue is far less than the small business relief, and let's say that with a revenue amount of 500,000 dirhams, your profit's probably going to be under the profit threshold as well. At this point, you're probably looking at whether or not the cost of compliance and doing the audit is really worthwhile. Right? So we have a lot of clients who are looking at this and are in this same scenario, who don't want to go through the pain of doing an audit. They don't want to go through the cost of doing an audit, and so they're going to be electing to be taxable people. They're going to elect out of their free zone exemption. They'll go for the small business relief until 2026, and then beyond that, they're not going to be taxable anyway because their profit is below that 375,000 dirham threshold. Now, obviously, we wouldn't recommend this if you expect the business to grow significantly, especially if you expect it to go past 3 million next year. And this is coming back to the opt-in and opt-out, because if your future plans for the business are that you're going to grow significantly, then it's worthwhile this year doing the audit, maintaining your free zone exemption and staying exempt for that future growth. Does that make sense?
Yep.
Yeah.
Cool. Oh, thanks. You're ahead of me. Good. Okay, so let's say there is, and this is going on the assumption that the ministry will release the legislation which says one client in the UAE means you lose your exemption. Okay, so let's say you're a free zone company, you've got 5 million of revenue, you've got revenue outside and inside the UAE, and so you're not qualifying for the free zone exemption. This is where people or clients are looking at their operating structure, the location of their clients, and a lot of them are actually coming down to a decision saying, well, I've got 3 clients in the UAE. Do I just jettison those clients before I become taxable? Is it worth it? You know, if you're a really large company, then it's a pure mathematical calculation saying, if I don't qualify for the free zone exemption, I'm going to be paying X amount in tax. Or do I take the plunge and maintain the integrity of my offshore income? This is where it's getting quite difficult. Difficult decision for these free zone companies. And I expect that this is why the ministry is deep in debate, because they don't want to create these kinds of behaviours in the legislation that they release. Okay, and finally, we get to the taxable business, right? And again, the fact that we've spoken for probably nearly an hour or 40 minutes about exemptions before we actually get to what is commonly talked about in the rest of the world in terms of taxable profit. Again, testament to the leniency of the tax laws. So this is where a company is genuinely taxable, right? So they don't qualify for the free zone exemption. They don't qualify for small business relief. They've got profits of over 375,000. Only at this point do we start talking about ways of minimising your taxable profit, right? So the most common question we get around this is from owners of businesses, and they are saying, can I just pay myself a massive salary, right? So yes, the default answer is no, but there are of course rules around this. So there's a whole section of the legislation around connected persons. So if you're the owner of a business, you can pay yourself a salary, you can pay your wife a salary, you can pay your kids a salary, but there has to be market value for those services, right? So there are ways of testing that, right? But the rule of thumb is if you went out and you hired someone else for that role, what would you be paying them? And that's what would be considered a reasonable arm's length market value salary. Now, we do have clients who are already asking us to do benchmarking exercises for this. So let's say they have an advertising company, they're a they're a one-person show. Maybe they've got one extra employee as well, and we are having to go and benchmark this against publicly available information. For example, CEOs of similar-sized ad agencies, and creating a benchmarking exercise, or partners in a consulting firm, for example. What would they be earning if they were in a top consulting firm, right? We create a benchmarking exercise. We say, all right, what is the range of salaries that someone in that role would earn? And then you create a table and you say, all right, this is what a reasonable salary would be. Those are the sort of steps you have to go through if you are looking at doing something quite extreme, right? If you have a business with turnover of 3.5 million and you want to pay yourself a 2 million dirham salary, then you really need to have proper support in place for that.
Is your job title as per your visa, or your job title as per what you actually do with them?
It's a good question. I think it's probably going to be. I think they'll need to actually look at what you do, right? Yeah, it's not going to be tied to the salary on your visa, that's for sure. Yeah. Yeah. You. Sorry.
Who approves this? So let's say you yourself do a benchmarking exercise on your own.
Yep.
Subjective.
Yep.
And you come up with 100,000 dirhams for a management consultancy.
Yep.
Position. Who approves this?
So no one approves it, right? But if you get selected for audit, Yeah, it's the big stick approach, right? So it's self-declaration, but then if you get selected for an audit and you get found that you've done something wrong, then it's a pretty hefty fine. Sorry.
Does this apply for freelance? I mean, they can pay themselves salary and then going through the same process in order to make it.
Yeah, sorry. Yeah, there's a couple of different ways that freelancers earn money. So if you are operating a business activity yourself, then you'll be considered, the same as any other business. If you're a freelancer but your only income is you're actually working for someone as an employee, then that's not going to be taxed because you're the same as an individual in the views of the FTA.
Yeah, but the freelancer is carrying on the activity for himself, so it's more likely to be considered as a business.
Yeah, right? That's right.
And then in this scenario, you cannot pay himself a salary that can then be deducted as a cost for the overall business activity.
Yeah, it'll be considered the same as a business. Yeah.
Okay, so they can do that.
Yeah. Yeah.
For the owners, we are talking about who's in the trade license, right? Means partner down.
Sorry?
For the owners,
Yeah.
salary, we are talking this, they are partner in the trade license, commercial license, right?
So we're talking about shareholders, directors, and their family.
How about the relative? Means he's not in the trade license, he's not in the MOI, the article of association, but he's working in the company, okay? And we are paying in the salary. So do we need to minus the?
Sorry, who is the person?
Okay, he's relative, but he's
relatives,
not,
right? Yeah. So there's a few degrees of kinship, and they've made it very wide. So I think it's your great grand niece and nephew. Like it's something outrageous. I was reading it and I was like, is that 3 greats? Yeah. But yeah, they're definitely cracking down on that.
Are you able to pay yourself bonuses and then offset that if it's industry and market?
Yeah. So they'll look at a total remuneration package, and this is when you get questions around, can I just put my apartment and my or my house and my car on the expense of the company, because obviously there's no fringe benefit tax here, right? So what they'll do is they'll look at that as a total remuneration package. So they'll give it a dollar value and say, right, that was the total remuneration. Is that market? Yeah. Obviously the difference is if it's an expense incurred in generating the revenue of the business. So if you rented a property where employees were living while they were working on something specific or something like that, then that could potentially be claimed not as a remuneration expense. It's a business expense. But yeah.
What is the limit for the freelancers for the salary or individual has to pay if it exceeds?
There's no limit on it. It's just and they've intentionally not put a limit on it. So yeah, it's just got to be reasonable market value for that amount.
Yeah, for the benchmarking, how would we be doing it? Because
So
there are too many resources.
Yeah. So I mean, it's you'd only do a benchmarking exercise if you're going to be doing something really quite high. I think there are ranges where you'd probably say, look, this is, you just know that it's reasonable, and it's not going to create an issue. Yeah. Okay.
So one of the steps that you mentioned in terms of compliance is accounting. Okay?
Yes.
And one of the considerations here is deductible expenditure.
Yeah.
Do you recommend any changes that we can do to our chart of accounts where we can identify this deductible expenditure? Let's try and split the costs.
Yeah, so you've got to be careful about putting things through, for example, entertainment expense. I know a lot of companies get pretty lazy with their accounting and they just say, we'll just chuck it all into general or other or whatever. But if you do that and you get audited by the FTA and they're like, well, we can see a whole bunch of entertainment expenses in this big number here. Entertainment's only deductible at 50%. So you go out for lunch, you can only claim half of that. And so they would take a view of, well, we're going to take that whole account and add half of it back. So you've just got to be a bit more accurate and a bit more deliberate about where you're putting everything.
Okay. Yeah. So you can just take averages. For example, you have an account with entertainment expenses. Can you just take 50% of that and just say that, or you have to be 100% accurate?
I mean, if you're sure that everything that's in there is entertainment expenses, then you can do it. I mean, technically the correct answer is no. You should be looking at everything and but you know, there is you've got to be reasonable about these things, right? They're not going to expect you to go through everything line by line and divide it by 2.
I'm not sure if you answered this question, if it's for accommodation and the car and everything for the manager or for the owner.
Yeah.
They could ask a deductible.
No, so if it's for them personally, then that would be considered the same as you were paying them the salary or the additional funds to do that or to purchase those things. So it gets bundled into their remuneration if the FTA was to test that for reasonableness. So if you're the owner of the business or the owner's son, for example, or daughter, and you're putting that child's school fees through the business, right? That would be considered remuneration, the same as if you paid them that in a salary and then they'd go and pay the school fees with that.
Registration, is it simply an online process through the FTA website? And what do you have to attach?
Yeah, there's a few steps to it. So you've got to, there's certain documents you've got to upload. You've got to, identification. You don't need a bank account. That's actually a question that we've had a bit. So I know VAT registrations used to have mandatory bank accounts. Corporate tax, think of it this way, if you were a business and all of your profits were in cash, the tax man's still going to want his cut of that. So it doesn't matter if you've got a bank account, they'll still let you register. Yep. Oh, you first.
Say, for example, we have a company in Abu Dhabi on the free zone, but we have a branch that's on mainland. Does that get grouped together, or are those two separate entities?
So if the free zone company is a qualifying free zone, you can't group a.
No, I mean we need to register like two separate.
Oh, sorry. Yeah.
We need to register twice.
Yeah, you can register the branch under the registration, so it's fine. Yeah. But in terms of forming tax groups, there are a few. Sorry, I thought you were asking about tax groups. There are a few rules around that.
Set up entities. We already have them.
Yeah. No, that's cool. Sorry, there was a. No, oh, here we go. Sorry.
If you're a sole proprietor.
Yep.
And you accept a direct hire from one of your clients, and he gives you an NOC for doing that, but you keep some of your clients and you keep your income below 375.
Yep.
Are you entitled to have zero tax liability at that point? You want me to say it again?
Yeah. Sorry.
Sole proprietor, it's just me and my family.
Yep.
If I accept a direct hire from one of my clients, now I'm a full-time employee for him, and he's given me an NOC to allow me to keep my company, which allows me to keep my visa under control.
Yep.
With my kids.
Yep.
And my income on that side of it, forget about my salary and what I make from the other company, is under 375. Do I qualify for zero?
Yeah, so they're not going to bundle your wages into your
separate.
It's separate, and it's a good point because.
And I get a separate personal account if I need to. That's my next question.
Yeah, a separate bank account, if you mean, yeah.
Yeah, so nobody can and keep it.
Yeah, and it's a good question as well because people do ask, oh, what if I own shares and what if I own real estate in my own name? All of that is personal income, and so that's exempt. The only time that you might be taxed doing, as an individual, is if you are conducting a business activity, right, which is not personal investments, it's not real estate, it's not your wages.
No.
Yeah.
So it's zero.
Yeah. So the only time, and even then it would have to be over $1 million. So the scenarios they're catching there is like if you're an individual and you sell your IKEA side table on Dubizzle, they're not going to tax you for that, right? But if you sell 1 million dirhams worth of IKEA side tables, I know that's not related to you, but this is just the rule that they've come out with, which is if you sell 1 million dirhams worth of IKEA side tables, that's starting to look very much like a business. So we'll tax you with that.
Now I did register for VAT.
Yep.
And the reason I did that was because I didn't think this was going to happen, and I was going to exceed the 375.
Yep.
Now it looks like I won't exceed the 375. can I unregister, deregister for VAT?
Yes, and you should, because if you go, there are late deregistration fines as well.
Right.
So, so if you go,
So, as soon as I get hired, if I get hired, it hasn't happened yet.
Yeah.
First thing is deregister for VAT.
Yeah, yeah.
Thank you very much.
No worries.
Going back to the company partnership, if I'm a partner in a company and the company is distributing the dividend on all the partners at the end of the year,
Yep.
me as a partner, do I get taxed on my dividend that I'm earning?
No, no. So dividends are paid after tax. So basically, that's a post-tax profit distribution. That's personal income, so you're not taxed on that personally. If you're a shareholder of the company.
As a shareholder, I'm not taxed.
No, not on the dividend. Yeah. Yes.
If I qualify for the free zone exemption because 90% of my business is from abroad, and
Yeah.
say 10% of it is from mainland, can I open up a branch in mainland and put that 10%?
So this is the other question that, you know.
And file separately?
So if the sole purpose of opening that branch is to avoid paying tax, then it's going to be a little bit dicey. I expect they're going to say that in the anti-abuse laws, which will be anti-abuse section of the law, which they're about to release. If they come out and they say that it's fine, fantastic, go for it. But, you know, I'll be surprised.
To qualify for free zone, the audit should be done at the beginning of the taxable year or at the end?
No, at the end. So basically you do your accounts for the whole year, and then at the end of the tax year, you send those accounts to an auditor. They give you a stamp which says, yes, you meet the criteria for the free zone exemption, and then you're away. Yeah. Yeah, because at the start of the year, there's nothing to audit yet, so you need to wait until the end. Yeah.
Which basically would be the first time at the end of 2024 then?
Yeah, for those of you that either haven't started, that already have a business, it'll be the end of 2024 will be your first auditable tax year.
In regards to this whole audit that you were talking about, if you fall in this scenario where you're not taxable because you're under 375 and audit's not required.
Yep.
What happens if the FTA or the government comes in, you want to see your accounts and you don't have an audited system? What happens? Because I'm a really small business.
No, that's right. So they'll check that you've used an appropriate accounting standard. So if your turnover is less than 3 million, you can use cash basis accounting. So basically that just means that you've classified your bank statement transactions correctly into the correct accounts.
And if you don't have an audit, they're not going to fine you for not having one?
No. The only times that you might, there might be other reasons that you have to do an audit. For example, if your free zone, it's a mandatory requirement of your free zone, then you might have to do it for that. But for corporate tax, they've said that you don't have to do an audit if your revenue is less than 3 million, for example. Yeah. Okay. How are we doing time-wise? I think we're getting there. Okay. So maybe we'll draw a close there. I'll be around for a little while. I'd like to have a quick chat to the DWDC people because it might help to just clarify that. Obviously, come and have a chat to us at VirtuZone if you have any questions around what needs to be done. We obviously cover all of the services. We cover all your mandatory requirements. We've got early bird packages available. If you take up a package now, even if you're not taxable until January, you have everything in order, and you basically get free accounting until then. So really encourage people to get on top of it now. Don't leave it until halfway through the year and try and backdate everything. Okay. Thank you, everyone.
Thank you.
Thanks.